Welcome to our Line Opinion panelists for the week. We're happy to be joined in studio by Crystal Ciarza. She is owner and CEO of Ciarza Social Digital. Former State Senator Dee Dee Feldman right to her left. Always glad to have Ms. Feldman. And former State Representative Daniel Foley right there. Thank you all for being here. Now, our first topic today concerns taxes. At the Roundhouse this week, elected officials are considering a cut to the state's gross receipt tax rate. House Bill 367, a bipartisan bill, by the way, co-sponsored by 4 elected officials, would drop the state's GRT rate from 5% to 4.625%. Advocates say the bill says the move would save more than $400 million for New Mexican residents and, more importantly, small businesses. However, with that proposed tax cut, could mean a decrease in $70 million. Start with you, Senator Feldman, in tax revenue for counties and municipalities. Should this GRT tax be passed? Let's start at the very simple base here. What do we lose? What do we gain? What's the pluses and minuses of cutting versus not cutting?
Well, this is first of all a tax cut, and it's a tax cut that would also include an end to tax pyramiding,
yes.
Which is a long grievance, I think, that
That's
especially small businesses have had.
That's right.
It'll cost the state a lot of money. And it comes on the heels of a tax cut last year in gross receipts tax, which was phased in over 2 years.
That's right.
So it's going to hit the municipalities and the counties hard. What they usually do in response is they raise their portion of the gross receipts tax, so it doesn't benefit the consumer that much, unless there is some sort of a hold harmless clause, which prevents them from doing that and reimburses them for the lost revenue. So this is not tax reform, I don't think.
Right.
I think it's just another tax cut.
Right.
I was hoping that this legislature would really look at the whole tax structure. And rather than just giving away revenue, also think about reforming the graduated personal income tax and some ways of picking up revenue as well as losing revenue. And I don't think this is it.
You're describing, though, that's a very hard thing. You know, if you take from one, somebody else loses. I mean, do we have to have a system like that?
Well, that's the tax system.
Yeah.
You have to look at it in a system-wide way. You can't just give away everything, or you can't just take in everything.
That's right.
It's got to be a balance, and therein lies the problem.
Exactly right.
That's where you need good legislators, bipartisan approach. We've tried to do it for years unsuccessfully.
Yep.
Instead, we just keep giving one break, one deduction after another, you know, and they're all important and they're all good, but they all add up.
By the way, on your point, it was 5.125 before it was reduced to 5% last year. And that was our first tax cut, GRT, and the GRT, Dan, in 40 years, going down to 5%. But I got to ask you, 3 Republicans, 1 Democrat supporting, the governor is very much supporting. This feels like it's got a lot of momentum. Should we be cautious, though? Kind of the same question inside out.
Yeah, no, I don't,
is there something?
No, I don't feel cautious at all. I feel like there's no lack of us making money as the government. Anytime the government can give money back, streamline the process, obviously I'm okay with that. The senator is correct on a lot of the stuff she said. I don't disagree with her at all. I do think there's a difference between the personal income tax and the gross receipts tax, and I think that they're looking at this from a business perspective. I do think, you know, it's interesting in all the articles that we're reading, you know, the cities and the counties and the municipal league, they're all, you know, our stance is always anything that declines revenue for a city we say is a bad idea, which is insane. I mean, you know, there's the potential that we are with our gross receipts, and more importantly, to the senator's point, it's not necessarily just the percentage, which is pretty high. It's the process of who pays it, who doesn't pay it, when you pay it, who collects it, how it goes in. Yes, that's the problem. Yeah. That's a huge problem. And so it does become a hindrance to especially small businesses, right? I mean, it's one thing to have to pay GRT when your business is making $100 million a year. Your staff does all of that. But if you're a mom and pop operation that has the potential to grow, you could really get yourself in a pickle with the gross receipts tax. I can give you an example. I had a constituent in Roswell that owned a hardware store. And I didn't realize that at the end of the year, through the gross receipts process, he would sell stuff. So if you came in, Gene, and said, listen, we're with a church, we have our are exempt from gross receipts tax, and he doesn't charge you, when the state comes in and audits you, there's certain things like maintenance items that you have to pay taxes on, new construction items that you don't. But if he doesn't understand all of that, guess who owes the money? He does, even though he didn't collect it from you.
Right.
And so it really, I mean, some of these businesses, I mean, I had constituents that would come to me on the gross receipts issue where, because they are the collector, it's not them paying it per se, they have to collect it, that they owe tens of thousands of dollars to the state, and it could be the difference between you staying in business or not staying in business. So I do think, we gotta, this has to be fixed. I do applaud the movement. I do applaud the fact that the governor is supporting this to move this forward. I do hope there's a hold harmless clause because the cities will turn right around and raise it.
Right.
The problem with the
gotta
hold
talk about
harmless,
that.
the whole problem with the hold harmless clause though as well on the food tax. Remember, we gave the money,
right.
and then we did the hold harmless, gave the money, and then by the time the hold harmless was running out, they jacked it right back up again.
Right.
And so it just is it seems like at the end of the day, no matter what reform we try, the person that loses in the end, it seems like, is the taxpayer.
I'm smiling because you and others, and Senator Feldman, you were in on this. 10 years plus ago, we talked about that food tax and what a problem it was, and how munis would just turn around and do their own thing once the state took their cut at it. But let me go back to pyramiding. Crystal, I got to get you in on this as a small business owner yourself.
Yeah, I have a lot of things to say.
There's a lot of clarity coming now. One of the things I appreciate in the argument is that it's finally becoming clear that bigger companies have an advantage here, meaning they can, and Dan knows this, you can have all these things that you don't have to farm out in-house, that you would have to collect GRT on. I'm not sure about your company's setup, but that's a huge problem for a lot of folks out there.
It is and it isn't. So like I almost brought my company budget together just to kind of prove the numbers behind whether or not this would work.
You would
or
do
not.
that. I love
it. But when it comes to the actually farming out or whether or not you're outsourcing or insourcing, I do both, right? I have folks that are actually internally running the finances, but I also have folks like an accountant that would be exempt from this rule of gross receipts that would actually be outsourced. 9 times out of 10 small companies, yes, they specifically outsource. It actually does benefit the small business owner because if, let's say, for example, your monthly fee to an accountant is $1,000, you're not paying $1,070 anymore because of that 7%, or it would be less than that specifically. And the bigger companies, though, they use the argument that bigger companies are outsourcing for those specific entities. It's because of efficiency, operational efficiency, not because of and also cost savings. But at the end of the day, it's not going to really make a big difference. What nobody's talking about, though, nobody's talking about is the influx of expenses that all business owners, both small and large, have had to actually experience in the last 2 years, where a majority of expenses are actually being increased from 10 to 20%. That means rates are raising, prices, services, goods from 10 to 20%. And so, yes, you can make a big deal about 25, or was it 0.25% being lowered, but the municipalities are going to get it back anyways because we just all have to raise our rates. And so that's one thing that's not even taken into consideration. And if you are a business owner, what we've seen on the Asian Business Collaborative side is that majority of the businesses that have issues that they have to deal with is that they don't understand gross receipts to begin with, the difference between sales and gross receipts. So the erroneous nature of taxation would actually be eliminated, where tax and rev doesn't have to come to us as small business owners, business associations, to actually explain what the percentages actually are.
That's a good point.
And it makes sense that Representative Harper is actually leading the charge because what is Rio Rancho notorious for? Not getting enough gross receipts because they lose the business from Albuquerque
down the hill
every single time.
That's right. Interesting points there. Very interesting points. I hope this is part of that discussion. And so is Senator Feldman. I want to go back to hold harmless for municipalities. It's going to be a heck of an argument. There's no doubt about it. I mean, the fundamental argument that the state can't really, at the end of the day, tell munis exactly how to run their business versus the other way around. Is there a middle ground here on this? Because we're going to need some clarity on this. If we can't get it done in one session, how do we get around in having a true reform package that I know you've been looking for a lot of years? So,
well, it's a very complicated area, number one.
Yep.
But there have been bills passed in the past that have said counties can only raise their gross receipts tax a certain percent each year in an effort to address that. In addition, there is a possibility that the state could simply give the city of Albuquerque, for example, $30 million that it says it will cost every year. So in that case, the state is out not just the amount of lost tax revenue from lowering the gross receipts tax, but also the payments that it has to make to the municipalities every year.
Interesting
So it's a real sticky wicket, and that's why it's been so difficult to do in the past.
But I think municipalities actually have a bigger opportunity by simplifying the gross receipts process, because now more recruitment from economic development entities can come into the municipality and encourage more business to actually be there. Like Rio Rancho finally become a little bit more competitive than Albuquerque, and so once things are simplified, the opportunity door is wider for smaller municipalities to actually recruit more business. So therefore, more
way to
gross
look
receipts.
at it. Actually, let me give you, if you do it in 30 seconds, are there any lessons to be learned from the time you guys were in the legislature about the Bill Richardson push to cut the personal income tax and how that turned around to be not exactly the greatest thing financially for the state of New Mexico? Is there a warning there from that period?
I think it was a good thing for the state of New Mexico. I don't think it's, we in New Mexico, at some point we're going to realize municipalities, counties, the state. In New Mexico, and you and I argue about this all the time, Gene, we don't have a revenue problem, we have an expense problem. And at some point you have to stop saying that when you give money back to the shareholders, i.e. the taxpayers, the first response from elected officials is, well, now we don't have enough money to do what we need to do. One of the things we always did, and I always tried to do, whenever we do these things and do the hold harmless clauses, I always tried to add language to the bill that said if the local government wants to pass a tax increase, they have to put it for a vote. It can't be done. The city council can't meet and say, hey, we're going to up gross receipts by 0.25%. They actually got to go out and let the people vote on it. And when they do that, it's shocking how many of the voters don't vote for the increase, number one. And number two, how many of those cities and counties are still in existence today in New Mexico. They didn't blow away in the dust. So I think it just feeds the deal. We don't have a revenue problem as much as I think this state has a spending problem.
Good points there. Thanks to our line opinion panel there. We'll be back here at the table in less than 10 minutes. Talk about a new bill to increase the state's tax on alcohol.